Students, now we are going to discuss about accounts from incomplete records. In accountancy, generally accounts are classified into two accounts. One is single entry system, another one is double entry system. In case of single entry system, it's otherwise called as accounts from incomplete records. Single entry system means only one account is recorded. That is, single entry system is always unscientific and unsystematic. There is no accounting principles and standards are not followed, because in case of the Indian companies, we are having the Indian accounting standards, but these accounting standards are not followed in case of a single entry system. The single entry system is usually followed only by sole proprietors and partnership firms. But in case of a double entry system, all accounting transactions are classified into debit and credit. Each and every transaction is given as debit aspect and credit aspect. Each and every transactions are classified into two accounts. Double entry system is purely a scientific and systematic accounting method. All the accounting principles are followed in case of a double entry system. Usually double entry system is followed only by the companies for the purpose of tax purpose and for government authorities and for all the legal obligations. Double entry system is only followed. In case of principles of double entry system, Indian accounting standards we have, and in case of American companies, they are having American accounting standards. These accounting standards and principles are followed in case of a double entry system. But in case of a single entry system, only some accounts are recorded, some accounts are completely omitted. But in case of a double entry system, it's a purely scientific and systematic, all accounting transactions are followed. But in India, companies must maintain accounting records under double entry system as per section 128 subsection 1 of the Companies Act 2013. What is the meaning of incomplete records? Incomplete record means when accounting records are not maintained according to double entry system, these records are called as incomplete accounting records. Because in case of incomplete records, only cash and personal accounts are only maintained fully. Because we are having three types of accounts: real account, nominal account and personal account. But all these three accounts are not maintained in case of a incomplete record. For example, the expenses paid may be entered only in cash account. Some transactions are not recorded at all. For example, in case of wages paid or salaries paid, only one account is given debit. In case of a cash account is given with the debit or credit. But in case of a depreciation on fixed assets, these transactions are completely omitted. Some transactions are partially recorded, some transactions are completely omitted. Features of incomplete records. That is, next we pass on to features of incomplete records. That is the characteristics of single entry system. This characteristics of single entry system is nature. That is, the single entry system is purely an unscientific and unsystematic accounting principles and standards are not followed. Purely an unsystematic method. There is no uniform procedure for all companies, all the sole traders and partnership firms. Then types of accounts. Only two accounts is followed in case of incomplete records. Only cash and personal accounts are maintained fully. Real nominal accounts are not maintained properly. Some transactions are completely omitted. Already we might have seen some of the transaction in case of the depreciation on fixed assets and the expenses incurred, it's partially only recorded. So the partial omission of some of the transaction and the complete omission of some of the transactions are in incomplete records, or the main features of incomplete records. Then lack of uniformity. Different organizations record their transaction according to their needs and conveniences. There is no uniformity in recording transaction in between different sole traders and partnership firms. Next, financial statements may not present true and fair view. The financial statements are not complete and accurate. Due to incomplete information, inaccurate records of accounts, true financial position and profitability cannot be ascertained. In case of a double entry system, we have to prepare the trading profit and loss account. We can have a complete, accurate gross profit and net profit of the companies. But in case of the single entry system, we cannot have a true financial position and profitability of the companies. Then next we pass on to the fifth one, suitability. This type of single entry system is suitable only for the business concern which have no legal obligation to maintain books of accounts under double entry system. That is example, sole trader and partnership firms. They need not maintain under double entry system. Then next one, mixing up of business organization. Purchase of goods for personal use may be mixed up with business purchase. That is, in case of a sole traders and partnership firm, any goods which are purchased for the domestic use may be mixed with the business purchases. Then for example, in case of if a person having a car, the car can be used both for business purpose and for the domestic purpose. So the personal expenses of the sole proprietor is mixed with the business expenses. So there is no clarity in between the business expenses and the personal expenses. Next we pass on to the limitations of incomplete records. There are the disadvantages. Lack of proper maintenance of records. All records are not maintained properly because only cash and personal accounts are only recorded in case of incomplete records. It is purely unscientific and unsystematic way of maintaining records. Then difficult in preparing trial balance. Trial balance is mainly prepared to find the accuracy of accounts. Here the accounts records are incomplete, hence it is difficult to prepare trial balance. Then difficulty in ascertaining true profitability of business. True profitability of the business can be ascertained only by preparing trading and profit and loss account. Profit can be ascertained only based on available information in case of incomplete records because all transactions are not recorded. Some of the transactions are completely omitted in case of incomplete records. So accuracy in profitability cannot be ascertained. Then difficulty in ascertaining financial position. Financial position of the business can be ascertained only by preparing balance sheet. So in the balance sheet we must have a correct value of assets and liabilities. But in case of a single entry system, assets and values are recorded only on a estimated basis. The estimated values are only recorded in balance sheet. So it is difficult to ascertain the true financial position of the companies. Then errors and frauds cannot be deducted easily. Errors and frauds can be deducted only when we are preparing trial balance. But in case of a single entry system, there is no possibility of preparing trial balance because trial balance is mainly prepared only to identify the arithmetical accuracy. The partial omission and complete omission of accounts can be identified only by preparing trial balance. But that is not possible in case of incomplete records. Then next point, unacceptable to government and other authorities. Government and tax authorities do not accept accounts prepared from incomplete records because in case of the companies, the accounts and tax authorities accept all accounts for the purpose of auditing only when it is prepared under double entry system. Then next we pass on to distinction between double entry system, incomplete records. Already we might have seen all the points. From that point itself we can derive the differences between double entry system and incomplete records. First, the basis of distinction, recording of transaction. In case of recording of transaction, double entry system is given, each and every transaction is given with a debit aspect and credit aspect in case of a double entry system. But in case of incomplete records, there is no debitant aspect, some aspects are completely omitted. In case of a double entry system, each and every transaction is recorded. Then next we pass on to the types of accounts maintained. Only personal accounts are maintained. In case of a credit purchases and credit sales, only debtors and creditors accounts are maintained. In case of incomplete records, cash accounts are maintained. But in case of a double entry system, all accounts are recorded. Personal account, real account, nominal account, all types of accounts are recorded as per the accounting standards. Then next we pass on to the third point, preparation of trial balance. Trial balance must be prepared in case of a double entry system to check the arithmetical accuracy. If there is any arithmetical records, it can be easily identified in case of a double entry system. But in case of incomplete records, due to partial recording of some of the transaction and complete omission of some of the transaction, there is no possibility of preparing trial balance. Then determination of true profit and loss. In case of a double entry system, we are preparing trading profit and loss account. So the correct accurate gross profit net profit is possible to have in case of a double entry system. But in case of incomplete records, there is no possibility of preparation of trading profit and loss account. So true profit cannot be ascertained. The next we pass on to the fifth point, determination of financial position. Financial position of companies can be ascertained only when we are preparing balance sheet, because the balance sheet only we are having the accurate value of all assets and liabilities. So this is possible. But in case of incomplete records, the preparation of balance sheet is not possible. It cannot be prepared because all the assets and liabilities are recorded only on estimated value. Then next we pass on to suitability. This double entry system is suitable for all types of organization, whether it is a government organization or private organization or limited companies. It is suitable for all types of organization. But in case of incomplete records, it is suitable only for sole traders and partnership firms. Next we pass on to reliability. The double entry system is a purely scientific and based on accounting standards. So these accounts are accurate. But incomplete records are not acceptable to all users. Then acceptability, government authorities, tax authorities, all financial institutions accept the recording of accounts under double entry system, but incomplete records are not acceptable to all users. Then next we pass on to what are the accounts prepared under accounts from incomplete records. Only two accounts are prepared. First one is statement of profit or loss. Next one is statement of offers. In case of statement of profit or loss, we know the profit or loss can be ascertained, the difference between opening capital and closing capital with subject to the adjustment of drawings and additional capital. We can have profit or loss. Then the format used to find out the profit or loss. The format is closing capital, add drawings, less additional capital introduced, we can have a closed adjusted closing capital, less opening capital, then the final answer may be profit or loss for the year. Next we pass on to the sums. First sum, from the following particulars ascertain profit or loss. So capital in the beginning of the year 2 lakhs, capital at the end of the year 3,50,000, additional capital introduced 70,000, drawings during the year 40,000. So the capital in the beginning means that is the opening capital. Capital at the end of the year means closing capital, additional capital and drawings. As per the format, first we have to take the closing capital and add drawings less additional capital. So closing capital 3,50,000, add drawings 40,000. So the total, from the total of 3,90,000 less additional capital 70,000, we can have the adjusted closing capital. Then next, less opening capital. So when the adjusted closing capital is more than the opening capital, the answer may be profit. When the adjusted closing capital is less than the opening capital, the answer may be loss. But in this sum, listen once again, capital in the beginning of the year means opening capital. Capital at the end of the year means closing capital. Next, additional capital introduced, drawings. The format is closing capital, add drawings, less additional capital, less opening capital, we can have profit. Next sum, the same pattern, from the following particulars ascertain profit or loss. Capital as on 1st April 2018, 1,60,000. Capital as on 31st March 2019, 1,50,000. Additional capital introduced 25,000. Drawings made during the year 30,000. The difference between the first sum, you see, capital in the beginning of the year, capital at the end of the year. But see the next sum, capital as on 1st April 2018. When the year is given, we have to identify the opening and closing capital. When the year is given, 2018 is considered as a opening capital, 2019 is considered as a closing capital. So, according to the format, first we have to take the closing capital. So, closing capital, add drawings, less additional capital, we can have a adjusted closing capital, less opening capital, the answer is loss. Already we might have seen when the adjusted closing capital is less than the opening capital, the answer may be loss. But if the adjusted closing capital is more than the opening capital, the answer may be profit. The first sum we have seen, the adjusted closing capital is more than the opening capital, so we have profit. But now the adjusted closing capital is less than the opening capital, so the answer loss. Next sum, from the following details calculate missing information. Closing capital 1,90,000, additional capital introduced 50,000, drawings 30,000. Now the missing information is opening capital. Opening capital 2018 missing. Loss for the year is given. So before we pass on to the format, we must have a working note to identify the opening capital. Here the point we must note, how to identify the opening capital. If closing capital is given in the sum, only we have to add drawings and loss. Keep that in mind. This is the one memory technique. With the closing capital, we have to add only drawings and loss. All other items should be deducted. So, in working notes, with the closing capital, add drawings, add loss and deduct all the additional capital introduced during the year, we can have opening capital. After that, we must pass on to the solution as per the format closing capital. Now, the closing capital is 1,90,000, add drawings 30,000, less additional capital introduced during the year 50,000, we have adjusted closing capital, less opening capital. This balancing figure we must find out through the working notes. Then the already loss which is given in the sum. So, when opening capital is given as a missing information, we must have a working notes to identify closing capital. Next, from the following details calculate the capital as on 31st December 2018. Capital 2018 27,500, goods taken for the personal use of the proprietor. Personal use, you must note this, personal use of the proprietor means drawings. Then next, additional capital introduced. Next, profit for the year. So, what is the missing information here? Missing information is closing capital. So, when the closing capital is given as a missing information, we must have a working notes. We cannot straight away go to the format. Format is closing capital, add drawing, less additional capital, less opening capital, we all know. But when closing capital is coming as a missing information, we must have a working note. In working note, opening capital plus profit plus additional capital and minus all other items. The only two memory technique, as I told already, when closing capital is given, only two transactions should be added, that is drawings and loss. When opening capital is given, with the opening capital we have to add only additional profit, additional capital and profit, keep that in mind. Now, closing capital is given as a missing information. So, we have to identify the closing capital through working notes. In working notes, from opening capital add additional capital and profit and minus the drawings given in the sum, we can have a closing capital. Then next we pass on to the format. Next is sum number 5. From the following details calculate missing information. Capital as on 1st April 2017, capital as on 31st March 2018 given, profit given, then drawings. So, now what is the missing information? Missing information here is drawings. When drawing is given as a missing information, we must have a working note. We cannot straight away go to the format, closing, add, drawings. We must have a working notes. In the working notes, we must take first, we have to take the opening capital. In opening capital, we have to add only two things, that is the additional capital and profit. Additional capital and profit is already given. The opening capital is 2,50,000. Add additional capital 30,000 and add profit 30,000. Then minus closing capital, we can have a drawings. Then next we pass on to the solution according to the format. Closing capital 2,75,000. Then add drawings. Already we might have seen in case of a working notes, drawings 20,000, then less additional capital, that is adjusted closing capital, less opening capital, the next one profit. Then alternative method, we can use the opening capital format in some cases only for the purpose of workings. Opening capital means we have to add only 2 points, additional capital and profit minus closing capital. We can have drawings. When drawings and closing capital comes as missing figure, we can use this format as a working note. Opening capital plus additional capital plus profit minus closing capital, we can have drawing. This is only for the working notes to identify the missing information, but sums should be prepared only according to the closing capital format. That is, the closing capital means add only drawings and loss. Opening capital means add only additional capital and profit. This is the format that I used. It is not given in a book, but for the easy memory technique, you keep that in mind. In closing capital, we have to add only two, drawings and loss. In case of the opening capital, add only additional capital and profit. All other items should be deducted. This is only for the working note purpose to identify the missing information. But as per format, we have to follow closing capital plus drawings minus additional capital minus closing capital, we can have profit or loss. But when closing capital and drawings are missed, we have to use only the opening capital format as a working note. In opening capital, we have to add only two, as I told already. Only two should be added with the opening capital, that is additional capital and profit. In case of a closing capital, we have to add only drawings and loss. This is not given in your textbook. This is the one memory technique we can use easily in order to find out the missing information. So, keep that in mind. In case of a closing capital, add only drawings and loss. In case of a opening capital, add additional capital and profit. All other items should be deducted. Okay. Then next we pass on to the very important, the multiple choice question. From the first unit, definitely we will have some of the 2 marks or a 1-word questions in multiple choice. By using the multiple choice questions, you can also write the 2-mark question. If the question is given as a, what is statement of affairs, you can write the answer from this multiple choice itself. What is statement of affairs? Statement of affairs is that first choice is given as statement of income and expenditure, statement of assets and liabilities, summary of cash transaction, summary of credit transaction. We all know very well, statement of affairs resembles balance sheet. Balance sheet means it's a assets and statement of assets and liabilities. So, the answer is B, statement of assets and liabilities. The next question, second one, opening statement of affairs is usually prepared to find out capital in the beginning of the year, capital at the end of the year, profit, loss. We all know profit or loss occurred during the year can be identified through incomplete records only by preparing statement of profit or loss. So, C and D definitely not a correct answer. Then capital at the end of the year. We have to prepare 2 types of statement of affairs. Statement of affairs to identify the opening capital, statement of affairs is prepared to find out the closing capital. Now, for the opening statement, answer A, capital in the beginning of the year is used to find out the opening capital. Which one of the following statement is not true in relation to incomplete records? Not true. We must be clear with the word not true. It's all unscientific method of recording transaction. Incomplete records mean unscientific records. That is true. Only two accounts are maintained. Cash and personal accounts are maintained. That is true. Tax authorities do not accept. That is true. So, what is not true? It's suitable for all types of organization. That is the answer, because incomplete records are suitable only for sole traders and partnership firms. So, the answer is it is suitable for all types of organization. That is not true. That is the correct answer. Next, we pass on to the fourth one. What is the amount of capital of the proprietor if his assets are 85,000 and liabilities are 21,000? When capital assets are given, liability is missing, we have to use the formula. Assets is equal to capital plus liabilities. Now, the missing information is asset 85,000 is given, liability 21,000 is given. So, assets is equal to capital plus liabilities. From the total asset 85,000, we have to deduct 21,000 liabilities. So, the answer is 64,000. 64,000 is the liability. So, 85,000 minus 21,000 is the answer, that is D, 64,000. Next, we pass on to fifth question. When capital in the beginning, that is opening capital 10,000, drawings during the year 6,000, profit made during the year 2,000, additional capital introduced 3,000. Find out the amount of capital at the end. When capital at the end is given as a missing information, we have to take the opening capital. In the opening capital, we have to add only two, that is additional capital and profit minus drawings. So, the answer is A, 9,000. Opening capital, capital in the beginning is opening capital 10,000, add additional capital given, additional capital 3,000 and add profit 2,000 minus drawing 6,000. So, the answer is A, 9,000. Next, the difference between total of assets and total of liability is taken as the total of assets and liabilities are capital, we all know. While preparing the statement of affairs itself, we know. So, the total assets and liabilities constitute the taken as a capital. The difference between the assets and liabilities are capital. So, answer is B. Next, a firm has assets worth 60,000 and capital 45,000, then its liability is, so assets is equal to capital plus liabilities. So, the answer is D, 15,000, asset minus capital. So, the liability is 15,000. Next, credit purchase is obtained from, credit purchase is obtained only from total creditors account. We all know bills, receivable, payable accounts balances are transferred to total debtors and creditors account. Total creditors account is prepared to find out the credit sales. So, the answer is D, total creditors account. Next, a firm has asset worth 47,500, asset is given and the liability is rupees 17,700, then capital. So, we have to use the formula, assets is equal to capital plus liabilities formula we have to use. So, asset minus liabilities, total value of assets 47,500 minus liabilities 17,700. So, the answer is A, 29,800. Next, we pass on to 10. Companies cannot keep books on single entry system because of, companies cannot keep. Companies can keep accounting records only on double entry system. So, the companies cannot keep books under single entry system because there is no legal provision, accounting principles and standards are not followed. So, the answer is B, legal provision. Next, incomplete records are those records which are not kept under dash system. Incomplete records are single entry system. Bookkeeping means accounting standards are followed. So, the answer is double entry system. Then the statement of affairs method is also called as dash method. Statement of affairs means net worth or capital comparison method, because we have to compare the opening capital with the closing capital to arrive profit or loss. So, the answer is net worth or capital comparison method. Next, question number 13. Dash is suitable only for sole trader and partnership firm. Already we might have seen the single entry system The accounts from incomplete record is suitable only for the sole traders and partnership firm. Then next to 14, single entry system keeps one cash book which makes up business as well as the personal transaction, that is private transaction. It is otherwise called as a domestic transaction. So, single entry system keeps or cash book which mixes up business as well as private, or it may be a domestic use, domestic transaction. So, the option A, private transaction, is the correct answer. True financial position cannot be ascertained as dash is not prepared due to the absence of nominal and real account. So, the answer is balance sheet, because the financial position can be ascertained only by preparing the balance sheet. In the balance sheet we must have a correct value of assets and liabilities, but there is no possibility in case of a single entry system. So, the option C, balance sheet, is correct answer. If it is desired to calculate profit by preparing trading and profit and loss account under single entry system, then it is called dash method. That is, the net worth method is otherwise called as a single entry system. Statement of offers is prepared to identify the opening and closing capital. So, the answer is C, conversion method. All the records which are recorded under single entry system should be converted into double entry system. So, this conversion method is the correct answer. So far we have discussed about 16 1-mark questions. Next, the remaining balance we will discuss in the next session.